Good afternoon, everybody. Welcome to your Thursday edition of the TraderMerlin show. It's a hot and sweaty one up here today. I'm already sweating. You guys can see it. Got MACs. Hasn't been fixed here yet. Exciting day. Not the best trading day for me. I got whipsawed out of 2 trades. I ended up getting short on the NASDAQ 100. And yeah, was great short and all of a sudden stopped me out. Went long, stopped me out. Done for the day. 2 losing trades back to back. I'm done. Yeah, what a day, Daryl. It's pretty interesting about face from these markets, seeing it down over 1%, then all of a sudden up over 1%, and then finishing down over 1%. So a lot of uncertainty out there, and it goes back to what I talked about on yesterday's show, which I think that there's a lot of, let's just say, trepidation with regards to tech stocks and their earnings. So that's why I came up with this graphic. I had all kinds of really funny ones, guys. Maybe as we progress, I'll show you some other ideas that Midjourney came up with as far as Magnificent 7 or Not So Magnificent 7. It was kind of a funny day. But yeah, I love this graphic. I said, show me a bunch of kids dressed up as superheroes not looking very happy. And yeah, you're right. The little kid on the left looked like he's got a full-grown beard at the age of like 5. So yeah, looking pretty good on this one. But anyway, they all look pretty disappointed. And why did I make it that way? Well, if you look at the Magnificent 7 stocks, they were pretty much down across the board, except Tesla, right? Which is great. I sold puts on Tesla, so fine, let it expire, worthless. But here is the, on the right-hand side of my screen, which I can't make any bigger. Unfortunately, if you notice the results there, Tesla was up 1.97%, but other than that, the other members of that Magnificent 7, all down. So not a good-looking day for the Magnificent 7. And we'll start kind of with the worst performer of the bunch, which was Microsoft. Microsoft just was ripping down all day. I mean, really didn't have much of a deviation from its path on the day. Pretty much down Periscope. And I mentioned yesterday my thoughts on this, where I believe that next week we're going to hear some comments from Microsoft saying we've invested so much in AI because that's what everyone's doing right now. But we're not going to get the numbers, or maybe they won't announce the numbers that people are expecting simply because of that capital outlay for AI and all the materials that go with that. So you had a second consecutive down day in a row, pretty significant, 2.45%. But for those of you who are value players, you can already see here, I've got it mapped out on the screen, over the last 2 weeks, or 14 days worth of trading, so 14 trading sessions, you're down almost 11% on Microsoft. And at some point, Microsoft will come into a buying opportunity here. And I was watching this one today, and I was really debating trying to sell some puts at this level right around 410. And I just opted against it, given all that it's got going on in my personal life right now, as well as getting ready to go on vacation next week. I was kind of, I'll wait and see what happens with Microsoft. And who knows, maybe Wednesday morning after Microsoft reports Tuesday night, I may change my tune on that one and look maybe down for the 390s if it gets down to that level. Marcus, the only time worthless is good when you sell puts. Exactly. Yeah, I love worthless. Worthless is great. Call me worthless. As long as my options expire worthless when I'm selling them, great. I don't care. Expire worthless. But yeah, there might be some good opportunities here for Microsoft. But if you look at the big trajectory here, there is a pretty good chance of a correction because this has just been up so much. Let's just go back and look from the past year or two. I'll go back from where this rally really started for Microsoft, which was November of 2022. If we go from there to the peak that we had just a couple weeks ago, you're looking at over 120% jump for Microsoft, 118. That's a pretty significant rally there, even though there are some tech stocks that have done better than that. But the likelihood of a pullback is fine. At this point, we're only, as I mentioned, we're sitting right now at about 11%. The number that I always look for, I don't know why, I guess that's just experience and having done this forever, it'd be about 20% pullback is kind of what I'm looking for. And that would bring us down on Microsoft to this lower level of consolidation that you see going back into January of this year, which would put you right around $370, $369. Could we get there over the next couple of days? Sure, we could. I don't know if I want to take that chance, but I think we could definitely get there. It would have to have a really bad earnings announcement. I don't see Microsoft coming out with something that's so atrocious that it drops all the way down to $370, but stranger things have happened. That's only $50 away, which is about 11%. And as you guys know, in the after-hour session, stocks can bounce all over the place and get kind of wild. So we'll see what happens there with Microsoft. Now, the real story was Google, Alphabet. Tom yesterday was making a lot of points about ad revenue, or he's made points over the past couple years on this program about how ad revenue is really starting to decline for search engine and Google, etc. And that may be one of the big factors that's impacting them. Also mentioned that, they've been in AI for quite some time, yet they have invested a lot more recently. Well, there is a challenge with Google, and that is that Google is the most dominant search engine. Sure, you could look at something like Brave, which I would argue is a better browser from privacy concerns and resource consumption, but Google has it. They've got their browser is dominant. Something interesting happened today. OpenAI, which is owned 49% by Microsoft, made an announcement that they are coming out with an AI search engine called Search GPT. So this is an interesting development because it does pose concerns for anybody who might be a Alphabet or Google holder, because you could see a significant competitor step up. Now, the question came in. Unfortunately, I didn't have time today to put the gentleman's question on here. I think it was John. I'm not sure. But John asked about this one. What about this Search GPT? And let's think about this for a second. If we look at what Microsoft has, Microsoft has ChatGPT integrated into their browser. So they're going to have these features and functionality anyway. And if you go out to Bing, which I'm not a huge fan of, but I don't use Bing. I try not to use Microsoft products. But you go out here and use Bing, they have their AI built into this. So there is already a degree of AI built into it. Of course, you can use your Copilot as well, which will answer questions and do search for you. So when you look at this graphic and you see Search GPT coming into competition and potentially competing against Alphabet and Google, I always say them together, sorry guys, so it will always be Google to me because of the way they're spelled. It's coming in and challenging Google, then what real advancement is this Search GPT going to do for Microsoft's Copilot or Bing? How much of an improvement will it make over their current browser situation? There are people like me who, other than Microsoft operating system, I try not to use Microsoft products. I think Microsoft Edge is a joke. It's a total hog and it's terrible on my computer. It never seems to run properly. Used to have Explorer, which was garbage. A lot of times these Microsoft products just don't function good. So I'm not going to use Microsoft's Bing or their search engine, even if it has Search GPT put into it. So when you saw this news today, I think a large part of why we saw Google tank today to the tune of almost 3% was people going, uh-oh, this could be the end of Google. And I disagree wholeheartedly. I don't think that this is going to be much of a difference to Google at all. Search GPT will be a robust search engine, I'm sure, but what's it going to do for us? How is it going to improve things so much that all of a sudden, I'm going to want to switch over and start using Microsoft Edge? Probably not going to happen. So that was your major piece for Google today. Obviously, that was piggybacking on top of their earnings. If we look at the decline we've seen over the past couple weeks, kind of doing that same beta test or litmus test that we did for Microsoft, Microsoft down almost 11%. You've got Alphabet down 12.5%. A lot of these really getting to that point where there might be some great long-term buying opportunities. I know some of you are are looking to buy lower, and this may be great from a long-term perspective. Some of you might actually be down on your positions right now, which is understandable because this happened kind of quickly. Les says, will Search GPT give you ads with your search requests? I don't know. I didn't see the details. Of what they were going to be releasing, just the announcement that they're coming out with Search GPT. Over the next week or so, I'll probably research more a little bit on what exactly this means. We would all love to have less ads, right, Les? Hate them ads. Maybe just eat a tiny piece of the pie. Right, Ricardo? And given Google's dominance in search, I don't know. I really don't think that this is something to be that fearful of. What are they going to do? Are they going to create their own browser and now you're going to log into Search GPT as your browser, or are they going to license this AI to other companies? And then what does that mean? Does that mean DuckDuckGo is now going to use Search GPT? I doubt it. Does it mean that Brave will? Probably not, because Brave is more about privacy concerns, and so is DuckDuckGo. So again, who is this going to benefit? It might benefit Microsoft a little bit because, again, Microsoft owns 49% of OpenAI, which is creating this product. And I would assume that Microsoft's going to say, let's put it on our browser to make it better. That's my assumption going into that one. Chio, let me get to that at the end of our section here. I only have like 3 things to discuss today, so not a lot to go over on today's markets. My skepticism, my cautiousness prevented me from making any big trades today other than some intraday day trades on the Nasdaq 100, and that really didn't do much. Looks like most of my positions will expire worthless tomorrow, which I'm very happy about. let's keep going down that list. So we started off, I'm going to switch this around from bad from worst to first, which I do like to go that way. There we go. Worst to first. So worst was Google now is actually showing the worst. Then you have Microsoft. All right. I know Tom was going to get me on something. Tom says, Google Search Labs AI integrated into Google's SERP search engine results page. They have a much larger content library thanks to Google Search Ads. Yeah, Tom, I'm curious what your take is. I mean, you seem to be very knowledgeable in this space. If ChatGPT, OpenAI, who again, we cannot overemphasize that it's owned 49% by Microsoft, if they come out with this amazing AI search engine, which that remains to be seen what it is, what it can do. I'm curious because right now it seems like search engines do everything that I think that they can do. What else can they do? Show me something new and innovative use for it, and maybe I'll convert. But do you think that this eats away at Google, or is this just a little extra bump up for Microsoft in their functionality of their browsers? I just don't see it being that impactful. Sure, John, I'll do that in just a minute. Yeah, exactly, Margaret. He knows way more than me. I'm just looking at price charts and the result of the data, but Tom is definitely much more understanding of the search side of things and data and ad revenue. I'm curious. And my gut tells me this is not going to be the killer that the media made it out to seem. They're like, oh, man, this is the end of Google. It's like, I don't think so. I don't think it's going to have that big of a dent on it. And personally, when you look across these numbers, there's going to come a point here where I'm going to be a happy buyer of Google. I'd love to buy it at 132, way down here at the origin of this last move from March, maybe closing one of these gaps, but we'll see. We'll see when you get down there. Really, it's going to be more about what happens next week, particularly with Microsoft, who again was down 2.45% today. Microsoft's earnings are next Tuesday night, so I'm excited about that one. Luckily, I don't leave until Wednesday, so I'll have a play on that. Now, let's move on to Nvidia. Now, we drew out this 20% drop a while back. This is not something that I just drew out yesterday. We talked about, I think, this initial pullback when we fell on June 24th. I said, look, 20% pullback would be no big deal, right? No big deal. But I think that that's where we're headed. Here we are today. Now the question is, where do we go from this point? As Nvidia is down 20% right now off of its all-time high, that's from the 20th of June, and where do we go from here? There's a lot of systems in place that if it's 20% off the high, are going to automatically start buying. We look at volume out here today. Notice how high the volume was on today's Nvidia chart. To me, this just smells of automated trading coming in and backstopping this thing as it hit that 20% mark and kind of stopped it right there. So if we go from the peak to where we are right now, it's down 20.23%. So just barely that 20% mark. For those of you who know my style, I love to look for gap fills, and I use those as targets. And you can see here, you got a couple nice unfilled gap. Well, one real big, nice unfilled gap that goes all the way back to May of 2024. $95.46 is where we're at there. And I think that was a comment that was made yesterday about I'd like to buy Nvidia at that level. And I was like, well, I don't know if we'll get there, but we might. 20% is a pretty significant drop. But if you look at where that level would be, you're looking at a drop of 32% overall off the all-time highs. Again, I am of the opinion that largely Nvidia's train has been driven off of hype. That this has been just a hype train. Certainly their numbers are showing pretty significant increases, and they keep raising their forecast dramatically. Until we get really solid use case applications for AI and the software as well as the hardware to back it up, I think the companies that are acquiring all of Nvidia's products and services are going to start to slow down their consumption. I think that will start to hurt Nvidia, at least in this short to intermediate term. Once these projects get built out, though, and we start to see more use cases, more applications for AI, not just search engines or writing me a resume with ChatGPT, what else can they do? I think you'll probably see Nvidia and maybe tech struggle until we get some more direct uses. And once that happens, then I think Nvidia takes off again because everyone will be trying to get to those defined products and now become dominant in those specific areas. So I personally think you're going to see Nvidia continue to drift lower. We don't have earnings for another couple of weeks. They are due to report earnings August 28th. So we got some time there before they report earnings. But all in all, 1.72% slide today, down 20% from the peak this year. Not looking so good at the moment. And, Oliver said, was it Oliver that said that? I think someone said here, Naum says, is the bull run over for now? It certainly feels that way. Again, nothing is definitive, right? But we're seeing in most of these major tech markets, which have been the pieces that have brought this market up, right? When you look at the Magnificent Seven, that's pretty much why these markets have had such robust runs. Microsoft, Nvidia, Apple, you could throw, Amazon, Google, maybe some Tesla in there. Tesla hasn't been that strong, at least not for the longer term period. I don't know, it does feel that way. It feels like that bull run might be over and we might see some retracement of prices and kind of calming of expectations about earnings going forward. Given what happened with Google, given what happened with Tesla, it wouldn't surprise me to see the forecast that Microsoft, Apple, and Amazon give next week are lower and they guide lower, which in my opinion would create more of a pullback in this market. So yeah, I am thinking of more downside movement overall for tech. Therefore, I'm leaning more towards a bull market is over. At least for the short term. I mean, I am of opinion that we're going to rally going into the election, but I think the next couple months could be pretty good down months. All right, so we've got Michael just joined us here. All right, fine, Michael. We'll go over Meta just because we're here. Meta is a little bit different than the other markets. Certainly the business model is slightly different, but you look at the move that has happened over the past 2 weeks, and it's very similar to all of the Magnificent Seven stocks. This is down 16%. So we've got Google down 11, Microsoft down 14, and Nvidia down, 20% off of its high, and you have Meta down almost 16.5% off of its high. This one for me technically is a much harder trade. Just looking at the chart, it feels like it's a much harder technical one because of these big gaps that have happened back here, this kind of island of price going into that last earnings announcement on April 24th. Meta social media, yep. I'm not going to go wrong with social media, but again, I think that they're going to do tremendously this quarter because of ad revenue and spend for politics and just more ads going into an election year. Always seems to be flooded. I don't use Microsoft, or I don't use Meta anymore. I am trying to solve problems with Meta. For those of you who know, my account at Meta, at Facebook, whatever, garbage book, somehow has been compromised, and it looks like somebody has a fake account, but it's not. It's like they have control of my account. I've gone and switched my passwords, and somebody is going out as me using AI's. They've used my voice, recorded it, or copied, put my voice into AI programs, and now have my AI voice talking to you through voicemail messages on Instagram and Facebook. It blows my mind. And Facebook does absolutely nothing to stop it. And it makes me believe that at some point you're going to see a class action lawsuit against Microsoft for their inability to stop thieves and scammers from stealing people's money. To me, this is, I don't know, I just can't believe, it's like asking the police for help and they don't even listen to you, they won't even respond to you. Microsoft or Facebook at this point, over 100 correspondences with Meta, and they've done absolutely nothing, no response to any of it at all. So I want to move away from it, but having a show like this, I do need to promote it on different social media platforms. So just remember, you guys remember this, and also tell your friends and anybody who's connected with me on social media, I will not contact you directly and ask you how your trading's going. I'm never going to send you an Instagram message saying, hey, DM, what's up, man? How you doing? It's been a long time. I will not do that. If you contact me directly, ask a personal question about this show or something like that. There should be some kind of password or something, because these guys it's crazy. It really is crazy, and it's concerning to me. Anyway, that's a small, isolated incident with Meta or Facebook. I don't know how many other people having that problem, but I imagine it's a lot. I know Brandon Wendell had a bunch of people copying him, and you got mimics all over the place. All right, that said, where do we think it's going? Well, this feels a little better, at least, right? You have this new high that was established just a couple weeks ago, so most markets have had this kind of sell-off here over that same period of time. As this continues on down, my target on this was 429.40. I've got that little red line drawn right there, and then it's going to be the origin of this gap, which actually should be down around 395. Because I have a bad taste in my mouth about Meta, I will not be looking to acquire Meta at lower prices regardless of where it goes. I'm not a fan of Meta, so again, I'll buy stocks that I like or don't have ill will with. Right now, my disdain for Meta prevents me from buying Facebook objectively, so forget it. I'm not going to buy Meta. That said, right now looks bearish, at least for the short term. Right, at least for the short term. I'm of the opinion that the rising tide floats all boats, but when the tide goes out, as it is right now, it could certainly impact a lot of these companies as well. And remember, Meta has been doing a lot to try to get into AI. So they're also spending a lot of money on AI and using AI on their platform. And we'll see if their announcements, which is going to happen, when's Meta? Meta's is the week after. Yeah, we're July 31st. So next Tuesday is going to be Meta. All right. For some reason, I thought Wednesday is going to be Meta. I didn't think Meta was next Wednesday. Oh, yeah, it is. That's right. There's 4. Man, I forgot. We have 4 major Magnificent 7 companies reporting next week. Microsoft on Tuesday. Wednesday is Meta and Amazon, and Thursday is Apple. So, yeah, forgot about Meta on Wednesday. I don't know how I could forget that bad boy. So, be careful with that one. I'm bearish at this point, but I'm not touching this one. I don't juggle that chainsaw, but for others, fine, go for it. Just not for me. I got an emotional attachment to it. I can't deal with. All right, let me real quickly catch up on some questions here. Tesla man, again, Elon sticking his nose in politics. I know. Yeah, I'm with you, Oliver. I really believe he should just shut up and not start putting his nose in politics. He is really getting a little bit too much for me. Just stick to doing what you do well, man. Stick to the business side of things. I really hope he stops this, otherwise he's going to build a bad rep for himself. John says, ES volume was double what it normally is, and it's completely screwed me up. Not just used to the speed of price movement. Well, you have this panic moment. And I wouldn't say we are in absolute panic mode, but when you look at volume levels, what's been happening on this sell-off, especially the last 3 sessions for the ES. You've got significantly increasing volume, and that's just not the ES. We could bring up SPY. SPY is lower than yesterday, but still relatively high. So you're getting emotion, right? You're getting these volatile swings. I'll show you the intraday stuff here just so you can see it. I know all of you watched this one, but this kind of blew my mind. The way that whipsawed today. We had that great sell-off, broke yesterday's lows, not yesterday's lows, the pre-market lows here on the NASDAQ. Just started tanking. All of a sudden, big volume came in, and it just came screaming back up, stopped me out. After it broke above, I went long. It got stopped out again on the sell-off here, and I just said, enough of this. But yeah, this is the type of thing that represented of uncertainty. The day before, no uncertainty. Straight panic all day long. People just going, nope, freaking out. Now we're at that situation where it's like, where are we going? What's happening here? And I think that that's going to continue over the next couple of weeks and be even more significant next week as we get, again, 4 of the Magnificent 7 reporting earnings. Are the pros using ES to hedge? I'm sure some of them are. I can't make a blanket statement like that, Margaret, like everyone's using it as a hedge. There's all sorts of techniques and strategies that these funds and major brokerage houses are using to hedge themselves and protect themselves. So to say they're all using the ES, don't know. It's been 2 years since the type of speed out of nowhere. Good, right? Bring it on. Yeah, I did great. Yes, luckily yesterday's was far superior than today, so I'm up for the week. But yeah, yesterday was great. Yesterday was a fantastic day. But John, that's the nature of the beast, my friend. Nature of the beast. I'd like to asking viewers if they ever notice and click on Facebook ads. I don't even notice them. All right, Tom, just for you. I should give you the power so you can actually create the poll yourself, so I don't have to type and talk at the same time. Do you ever click on Facebook ads? Yes or no? I'll even add an option. I don't use FB. All right, so there's your poll. We'll let that one ruminate in the chat here for a little bit. I just did a poll for Tom that says, do you ever click on Facebook ads? Interesting. It's an interesting question, Tom. I can honestly say I have never clicked on a Facebook ad. And I think that part of their ploy isn't necessarily that you click on the ad. It's more that you click, that the ad is in your head and you now remember that company. But yeah, interesting question. One thing that is funny, so I'm, as you guys know, well, if you go to a search engine and if you click on ads that are placed on, let's say, Google. So we'll go to Google and we'll go to, let's just say, trading schools. All right. So if you click on this, it's my understanding that the sponsored ones, the companies have to they have to pay per click. So if you click on that, these sponsored ads are going to pay. It's a little bit of money, but each click that they would get on a sponsored ad, they'd have to pay that to Google. So you guys might remember my individual that I hate that I used to work with, who lives in Chicago, who started his own school, which I hope it fails. He had ads here for a while. And because I knew it was costing him money every single time, I would just click on this, I'd refresh, click. That's how petty I am. I charged him a whole bunch of Google ads, and he got no reward for it. But yeah, but I don't do any of the Facebook stuff. All right, let me see what the poll is. I'm gonna end that poll here real quick. 29 votes, so it's a small group in there today. Most of you saying no. I guess every now and again you're gonna see an ad that you like. These AI algorithms, or these algorithms they have, are pretty impressive. I mean, they really start to get an understanding of what you like, what you're looking for, and things like that. So 24% of you said, I don't use Facebook. 3%, which is like literally one person, said yes, they've clicked on Facebook ads. 72% said no. Interesting. We hear about how much money is being paid off of ads on Facebook and Google, etc. Seems like most of us aren't clicking on ads, aren't clicking on that paid for marketing stuff. Even if I go to YouTube, I'm not exactly sure how YouTube works from an algorithm perspective, TUBE. When I watch a video, let me just click on, sorry, I'm going to play a video here. It's going to give me an ad,
Jenny.
So bear with me.
She was a nurse.
If I look over here, so obviously I listen to a lot of fish. So when you scroll down, let's go to YouTube on their homepage. There are ads over here on the side. Who do I want to support on this one? Listen to a lot of music here. Yeah, it doesn't really matter. Sometimes there's sponsored ads. Like here's one sponsored. I wonder how much they have to pay to get their ads up here, because that might be something if I ever wanted to get this channel even better, pay for a little bit of ad space here to get myself on trading searches and things like that. But, trading is an extremely expensive keyword industry. When you have companies like Trading Academy who spend a lot of money in advertising, and same with Warrior Trading and all these schools, it's very difficult to be able to afford the ad space there, because keywords for trading and investing are extremely expensive, not just from schools, but also from Fidelity and JP Morgan, etc. I do listen to Don Fran. Not all the time, rarely. I'll say rarely. I don't listen to much other than music. So you guys can see my search here. It's kind of funny. So Don Fran's popped up here. I like Don Fran. I just don't watch a lot of other trading shows. And there's a reason for that. The main reason I don't watch anybody else's shows, I don't watch anybody else's finance stuff, is number one is I don't want to copy their style, look and feel, talk track. This show is just me organic without having watched anybody being influenced by anybody. The other part is I don't want to say the same things that they're saying. I don't want to cover the same topics and be just a talking head that regurgitates information that everybody else does. So, I love having Don on. I love being on Don's show. He's a good guy, but I don't really watch other people's shows. Don't want to be swayed, influenced, whether that's setup, design, production, or content. I don't like to be swayed. I do notice he's now using OpenAI or some AI program to do his thumbnails on here. That's a good one. I like that. He can do better faces than what I can get with Midjourney. Midjourney is not that great at it. Look at what companies pay for ads, Super Bowl, yeah. Yeah, but remember, that's because you have this millions of captive audience when you're doing Super Bowl ads. All right, one sec. I had two other things I need to get to. One other piece I want to get to, two questions. I think Chio asked about a recession by the end of the year. Look, this is a pretty big discussion, and maybe we could do a more in-depth show on, let's do this. On Monday, I want you guys to do some thinking over the weekend, some research over the weekend, and think about what components, factors, variables you see. Just get a little piece of paper, make a little list, and we'll do it on our Monday show about the possibility of a recession. And I'll title the show something like, will there be a recession by the end of 2024? And we could come up with a lot of different arguments for it, and I think we could actually come up with some against it. So let's try to do a balance, check and balance thing on Monday talking about recession. I'll keep that up mainly for Monday's show. The other side, one little variable here is this one here. The Investors Channel, Dave, I watch them occasionally. He's sold out to another company, and I haven't been able to reach him. I've actually tried to contact Colin Teddards a few times, but he won't respond. So I don't really follow the investor channel much anymore, but they're pretty good. He still puts out some really good information. Colin is a solid guy. I wanted to bring up credit card debt. So what they're talking about is the credit card delinquencies, those that are late on payments, which you guys heard my rant the other day. You should never be late on a payment. If you're late on a payment, that should be your first kick in the teeth that you are bad with your money. Fix that problem. Don't ever carry a balance into the next month. Don't ever make the minimum payment pay in full. So, credit card delinquencies are at a 12-year high. 12-year high. So let's go back and look at the last 12 years. So we'll go, let's see, we are right now, I'm going to have to make this a monthly to make it a little bit easier for us to see. We'll go 1 month, and I'll do SPY. I think it's a better market. So we go from 2024, that means we're going all the way back to 2012. Now, 2012, we were doing okay. We actually were coming out of the 2009 crash, and everything was looking pretty bad. So that window of time from 2012, which was not the COVID time, obviously. We were still recovering from the financial crisis, but there was tons of money being pumped into the markets and the economy. It's concerning to me that we're having more delinquencies than we've had going all the way back to 2012. It's the highest levels of delinquencies on credit card debt since 2012. That's concerning to me, and that could be one variable that we could talk more about on the Monday show, talking about a recession. So, possibility of a recession, I won't give my feedback on that one right now because I'm good to make arguments either way. Personally, I don't care. I don't care. I kind of hope it happens because it would allow me to buy into a lot of market segments and companies at much lower prices, and I would love to do that. But I don't know. The economy right now is looking pretty good. Remember, economy and stock market are two very separate things, and sometimes there may be a disconnect there between those two, and I think that's what's happened. I think we've had the market is reflecting the economy improving significantly and just gone gangbusters, and then all of a sudden you add on a new market innovation like AI, and all of a sudden these stock markets just go haywire. And price charts, as you can see, have done that. The economy, I think, will be the equalizer and bring these markets back down, but the economy still feels okay for now. We'll run through some of the pieces to discuss on that Monday show. Andre says delinquencies are important to markets when the unemployment is high. Correct. And we have seen unemployment numbers start to rise. Now, they're not high. No one here can convince me that unemployment numbers are high. It's not going to happen. You can come up with any argument you want. Unemployment numbers are not high if we're looking at 4.1, 4.2%. That's not high at all, given the history of the United States of America. However, they're increasing. And does that 4.1, 4.2 jump to 4.5, 5%, 6%? That could happen. I mean, that's the potential. Now, next week, let me make sure I'm right here. Yeah, next week, I believe we have the unemployment numbers coming out. Let me verify this. Yes. So here is the economic calendar for next week. You can see we're at 4.1 right now. They're expecting us to stay at 4.1. And the chart here of the unemployment numbers, it is moving up. I'm going to zoom in here a little bit. It is moving up. But it's not like parabolic. It's just been creeping up, particularly if we go back into here. You can see it's definitely getting higher. And I believe that trend will continue. I think this is going to continue. But as I've mentioned many times, 5.5% is the number where I say that's the line. And that's the line. The only reason is because our central bankers have said in the past that 5.5% is considered full employment. So anything under 5.5% to me is a sign of a healthy economy. Will crime increase along with unemployment? Now, logically, those two things would go hand in hand, right? If all of a sudden we have more people unable to make their credit card payments, unable to make their car payments, unable to make their rent payments, they're going to start stealing. Now, unless you live in San Francisco, where stealing is just a part of life, sorry to my San Francisco friends out there. Someone showed me a sign in San Francisco, and it said, it was like a sign, and this is a real sign, it said, stealing anything over $999 is a crime. It's like, so you tell me I can steal anything under $1,000 and it's not a crime? Crazy. Yes, certainly historically, now those relationships would be true. As unemployment rises, as delinquencies start to rise, and people are facing more financial hardship, yeah, they'll start to steal more. Whether that's stealing for sustenance, like stealing food to live off of, or even stealing things like watches and high-end clothing to sell on different sites or sell on the street to make money? Yeah, I think so. I go grocery shopping all the time. Let's see, delinquencies. Do you even go grocery? I actually, yeah. Technician grocery shopping for me is actually fun because to give you guys an idea of how much of a technical analysis person I am, I actually struggle sometimes going through the produce department because they stack all the vegetables and they always makes these patterns and shapes, and I see price charts in the vegetables. That's how I am. All right. Let's see. Could Nvidia fall to $100 tomorrow, but Oxy might work since Buffett keeps buying? Forget what Buffett's buying. It doesn't matter what Buffett's buying. If people sell it, it's more powerful than what Buffett's buying. So, could Nvidia fall to $100 tomorrow? Anything's possible. But if I have to give you a spectrum of probability here, let's go back to the daily time frame here. Fall to 100. I don't see a catalyst that will push it down to 100. You're talking a 10% drop tomorrow. I'm going to say probably not. Right? I'm going to say probably not tomorrow. However, you look at their earnings time. That's going to be on August 28th. Do I think it could get to 100 by the 29th? Yes. 29th would be the day after their earnings announcement. Sure, I think we get to 100. I think we could be even far lower than 100, possibly on Nvidia, depending on what happens with the big tech and the Magnificent Seven here. You could see more pull down. And again, if Microsoft, if Apple talk about them slowing down their AI consumption, their AI appetite for now, then Nvidia is obviously going to take a hit. So yeah, I do think that there's the potential, but not tomorrow. If Nvidia drops 3-4% tomorrow, fine. But I don't see it dropping 10% tomorrow for no reason. A report came out on Wednesday that more and more people can't pay their credit card payments. Yep, exactly. That's what we're just talking about. So not only are they paying late fees, but they're paying interest on the amount that they owe money on, and that's terrible for consumers. Now, who is it good for? If more and more delinquencies are out there, then that means that Visa and MasterCard are going to reap the rewards. Now, there's two sides to this. Yes, Visa, MasterCard will be making more money because people will continue to make smaller payments, and now the interest being charged on that debt is going to get higher and higher. However, that also means you might see some delinquencies get larger and lead to a foreclosure or bankruptcy on these accounts. So while it's great because now they're getting more interest due on the money that they've lent out, Visa essentially is lending money, there is that risk that a lot of these people may go into bankruptcy if things continue to get worse. So you would think Visa and MasterCard might do well. Oops. What's Master? I thought it was Master. Oh, that's weird. Oh, MA. There's your MasterCard. Looks the exact same as Visa right now. So they've been struggling over the past few months. Was it? Second video. No, it's not. You said Nvidia is at 106. It's not at 106. I mean, you had it today all the way down to 106. That wasn't after hours. That was during regular market hours. You're down to 106 today, but that was just that big knee-jerk reaction to yesterday and the market overall. So I don't think it'll hit 100 tomorrow, but it could. If it hits 100 tomorrow, hey, sell some puts on it. Sell the $100 strike price expiring tomorrow afternoon. See how it goes. If you get it, you're going to get it at a discount. Let's see. All right. I think that was it for me. I talked about tech stocks. I talked about credit cards. I talked about Search GPT. And I talked about the not so magnificent 7, which I have not reached the peak of that pyramid yet. We were kind of midway through that before we stopped. It touched 106, but that was during market hours, not in the after hours. No, that was during regular market hours. So I made it all the way up to Meta, and then we were digressing from Meta. Here's Amazon, which isn't going to have as much of a talk track on Wednesday about their AI consumption. I am, as you guys know, I'm a huge fan of Amazon. I think it's one of the greatest companies in the world and will continue to be so. My buy point on this is going to be a closing of that gap at, call it 160. I don't think we're going to get there, but I hope we do. I hope Amazon sells off and gives me the opportunity to sell some puts on it, buy at a lower price, but so far, this looks better than most of these market indexes. It looks like just a pullback into an area of demand. We'll see if this one can continue on up or not. But Amazon was down, again, with everything else, 0.54% on the day. If you look at Apple, again, Apple will be reporting earnings after market next week on Thursday. You do have a hammer formation. Well, there was a couple. 1 second. We had a couple hammer formations today. Well, maybe I'm mistaken. I thought we had one on the Qs. No, we didn't have any. At one point today, everything looked like hammers. It was Hammerville across the market for the Magnificent Seven as this thing rebounded. But all in all, okay. Here, look. I'm just gonna prove you wrong, Michael. Here you go. Here's a 1 minute time frame. Everything in yellow is after hours. Everything in yellow is after hours. It did not hit 106. Did not hit 106. It only hit during this white part, which is regular market hours. So I don't know where you're getting your data from, but that's incorrect. It did not hit 106 in the after hours. I don't care. What was the first credit card? I think it was the Diners Club. I actually do think it was the Diners Club, Jimmy, if you're really talking nostalgia there. Yeah, it was hammer time, and I thought I had more to talk about with the hammers, but I didn't quite see anything on that list. So anyway, let's finish up here with Apple. I do not have a black card. Nope. Margaret, and here's the reason. So we go back to this credit card graphic here, right? Talk about credit card debt. Everybody should have multiple credit cards. It will help your credit score to have multiple credit cards, and don't have them all Visas. Have a Visa, have American Express, whatever. I generally have a Discover card, a Visa, and a MasterCard at all times. So at least 3. I have a Wells Fargo, but I never use it. Wells Fargo is my oldest credit card. I got when I was 18. I never use it. It just doesn't give me any perks. There's no benefits to it. There's no perks, but there's no annual fee, and it's the anchor for my credit history. If I were to get rid of that card, my credit history will change, and all of a sudden, my credit score might drop significantly. So I keep that one there as the original anchor point for my credit history. Now, no, I don't have a black card. A black, you have to pay, I believe you have to pay annual fee. I don't want to pay annual fees on credit cards. So there's even a, I think Citibank or Capital One has a metal card. I forget what it's called. I had it for a while, and they want $495 a year, and you get some amazing benefits, but you got to pay $495 a year. As you guys know, I play a game with the credit card companies, and that game is every 11. I just opened up a new one a month ago, and it was a United Mileage Plus card, which I already have a Mileage Plus account. So basically, I take that Mileage Plus. I'll get the 70,000 miles for my, for the first couple years, for the first few months. Once I get those 70,000 miles put into my account, I'll use that card for whatever perks for 11 months, and then at the end, I get rid of it. 11 months in, I'll get rid of that card. I will close it. And then what happens is after like 2 months, they come back and give me all these amazing offers over again. So I don't pay the annual renew fee because it's free the first year. And I'm getting more ads because they want me to keep coming back because they know I'm spending money. They think I'm going to make a late payment. It just won't happen. So Telly Savalas, was that the Diners Club, Chris? Good to see you, Chris. So yeah, that's the game I play. So I don't use the real fancy ones, the $495 too much. I do every card that'll give me a $95 per year membership fee, but the first year waived. And so I get all the perks and miles, points, whatever for the first year, and then I cancel it. And it does hurt your credit score. Let me just tell you, it does hurt your credit score, but it's only a couple of points. If you do 1 or 2 cards a year, it won't be too bad. If you do a lot of them, let's say you're doing 3 or 4 a year, it's going to impact your credit. You don't want to have that many inquiries on your account. The other thing for anybody here is if you are looking to buy a new home or maybe go buy a new vehicle in the next year, don't be flipping cards like this because you want to have a clean credit record. And the more inquiries you have on your credit record, the worse it is for you. So if you know you're buying a home next year, don't open up any new credit cards. Make sure your debt is paid off as low as possible on all credit cards so your LTV value is going to be much lower, etc. Anyway, we're digressing. Yeah, I have 1% back on Discover card, no annual fee. It's the card I have everything linked up to. And then they rotate every 3 months. They give you one segment of the market that is 5% discount. So like all your gas is 5% discount for the month, or all your Costco purchases or Amazon. There's certain categories that they do. 5%, I mean, just by using their card, I save 5% for 3 months on many aspects of my life. Great. As you guys know, a penny here, a penny there, it adds up to real money. Toby says a couple inquiries a year is like when you work for your muscles and it... Yeah, they want to make sure that you have established credit. You're utilizing it as well. But anyway, we're turning this into a credit card show. Let's move on. I want to get to the top of the list here so I can wrap up the show and go to the dog park. My dog's just probably staring at me at the bottom of the stairs. All right, so we had Apple. Again, Apple's reporting on Thursday. Be very careful with this one. You know, Apple's still looking fantastic. I mean, this picture here just looks like a normal pullback. If this market continues to slide, it's pretty obvious where we're going to go. We're going to go back to the origin of this big move here, which takes us back to this low from from June of this year, which is right around 208. That's not very far from current levels. After that, you're looking at a little bit steeper decline. And again, on earnings, Apple could hit these no problem. Heck, on earnings, Apple could even close that gap. And finally, Tesla was the only one of the Magnificent Seven that was up today. Fine with me. You know, as you guys know, I sold the puts for August 16th, which is that vertical line right there, the 205s. I want to buy back into Tesla for the long haul. I actually hope it keeps dropping. I hope this market sells off and gets much, much lower so that I can purchase more things that I would like at lower levels. But we'll see how that goes. Anyway, that's your Magnificent Seven. I think I pretty much did our market wrap up there. All right. John says, Ethereum. What about Ethereum? I don't know if you were on yesterday's show, John, but we talked about it on yesterday's show, which was the Ethereum ETF coming out. And these are those ETFs right here. I have all the fees associated there, and you can find out which, you're going to ultimately find out which one you like better. But what's going on with Ethereum? People ask, where do I think it's going to go? I think it's going down. And this is an example of buy the rumor, sell the news. So let me go and show you the ETH chart here. Hold on 1 second as I bring that bad boy up. So on Ethereum, the vertical line represents the day that ETF came out, right? The day that the series of ETFs came out. So what you end up having here is buy the rumor, sell the news. So now all of a sudden, people are selling off because we got the ETFs. They've been waiting for it. I think what will happen is you're going to have a week or two of downside movement here, and then it'll start to move back to the upside as people start to invest in these ETFs and buy into them, and you start to see capital inflows. The only reason I have this hypothesis is the only one to measure it against is Bitcoin. So I did this yesterday. If you look here, notice what happened when Bitcoin came out with their ETF. January 10th, Wednesday. That's when the ETFs were released. All 11 of them were approved. What did it do? It sold off for 2 weeks. And then I think what happened is it sold off for 2 weeks, but then all of a sudden people were like, oh, I can now add it to my portfolio. I can add it to my IRA, et cetera. And we saw that really big run. I think Ethereum is going to have a much similar picture to that, where we start to see a sell-off here and then move back to the upside. Now, to talk about Anthony Papiano solid. So what are we going to talk about those two? Solana versus Ethereum. In the Pepsi challenge between Solana and Ethereum, Ethereum has the network effect. For those who don't know, Ethereum has a 12 or 13 to 15 second block time. That means each block of data is roughly 15 seconds. We'll leave it there. They can only do about 15 transactions per second, so it's pretty slow. But they have huge market share. They already have a dominant portion of the market of DeFi, lending protocols, exchanges. That was built on Ethereum because they were the OGs. Now Solana comes along. At the beginning, you go back into 2019, 20, 21, Solana wasn't doing very good. Well, not even 19, but even 2021, 22, Solana was bad, real bad. They're much faster. So Solana can do, they say, it's never been proven, but they say they can do upwards of 65,000 transactions per second. So side by side, Solana wins the speed category. The block time, meaning how long does it take for these transactions to fully be done, final, and put into a block? 15 seconds on Ethereum. It's right around 4 seconds. It's debatable depending on who you talk to, but 4 seconds seems to be the norm for Solana. Solana wins that category. Fees are so much cheaper on Solana. So at face value, you look at it and say, well, Solana's the winner, right? It still doesn't have the ecosystem. There's not a lot built on Solana yet. So even though it looks better, it's faster, it's like the $6 million man. It's better, it's faster, it's cheaper, but it doesn't have the community yet because people are still locked into. They've built their businesses on top of Ethereum. Here's the kicker. Again, for those of you who are Solana fans, as I am, I mean, look, Ethereum is my number 2 holding, Solana is my number 3 holding. So I'm going with both of them because I don't know which one's going to win the race. If Ethereum does their upgrade to their transactions, which is expected to happen by the year end, the next upgrade, then Ethereum would go from 15 transactions per second to 1,500 transactions per second, which right now is more than what Solana is doing. Solana says they can do 65,000 transactions per second, but they're not even close to that. They're doing a couple hundred maybe per second because there's not a lot of people using it. So if Ethereum can get to 1,500 transactions per second, then all of a sudden it's going to be doing better than Solana. Then next year there's another upgrade. So there's two upgrades. One's called a ZK rollup, zero knowledge proof rollup, which will basically batch transactions. That is 100x to their transaction base. The second upgrade is happening next year is supposed to be what's called sharding, S-H-A-R-D. Watch your pronunciation here. Sharding would do another 100x, which means that Ethereum would be doing 150,000 transactions per second. If that were the case, there wouldn't be a need for Solana or Algorand or Polkadot or EOS. All those would just slowly disappear. So at this point, you're in a very interesting race where Solana is really starting to take some of Ethereum's market share, but Ethereum already has so much more market share, right? Think of Solana as a shark feasting on a blue whale carcass. It's got a lot to eat before it takes over. It's not going to be the alpha, but it does have a lot of potential. So I'm a fan of both of them. I do own both of them. You know, if you look at Solana's chart here, it looks slightly better than Ethereum's, but really for all of these markets, they've been kind of weak over the past few months. I'm really looking forward to a breakout here on Solana to the upside and see if we can get to much higher levels, and I hope that they both do well for a while. I sure didn't know where yeah, I do my reading on it now. I mean, that's why I have people coming after me just trying to get me to build cryptocurrency programs for their companies, and we'll see. That might be an interesting transition for me, but I'm, as you guys know, I'm fascinated by what the future may hold. It's not that it's definitive, but in agreement, I'm 100% believer that the financial system is upgrading, and they're starting to use these pieces. You know, people are always like, oh, crypto's garbage, blockchain's stupid. Guys, JP Morgan, again, is using Avalanche, which has Ethereum-based products, as their blockchain. So why would you not want to be buying Avalanche and Ethereum? Because JP Morgan's network may actually plug into at some point. We're not sure how that's all going to work. But Onyx, which is their network, may actually plug into these networks. And all of a sudden, we'd have instant access to the whole suite of JP Morgan products and services, fully electronic, much faster, much more efficient, much cheaper. So, yeah, I had to acknowledge your book. It would be a totally different one. John Stinky Blubber. Shiba is dumping. Good. Shiba deserves to go to zero. Shiba is trash. This is a con. This is a scam. This is fraud, in my opinion. This is a absolute fraud. The only one that would be worse than this was Pepe. And the reason I say worse is because Pepe, let me put it in here because I don't have it on the list. Pepe literally on their website says we're a joke. We don't do anything. There's no value. We literally are nothing. And this one is the 23rd largest cryptocurrency in the world, which is just as embarrassing as someone who's an enthusiast of it. Pretty pathetic. But this will go to zero. I guarantee you, this will go to zero. If it doesn't do anything, if it doesn't have any benefit, no services, no products, no nothing built on it, it's just a pump and dump, it's going to zero. Zero. And same thing with Shiba Inu. Shiba is the ultimate con. I could do a show specific. I think I did do a show on what's the probability of Shiba Inu getting to $1 or something like that. I think I did a show on that one a long time. Where's Pepe been? You mean the regular in here? I don't know. Pepe used to be a regular in here. Is Doge fraud? No. So Doge is actually really taking Bitcoin's idea and making a peer-to-peer payment network. So is it a fraud? No, it's not a fraud. Someone just copied Bitcoin, threw a funky dog face on it, and now, it's popular. Until people start accepting it, it'll just fizzle away. Doge, for whatever reason, has been popular, and I don't get it. I want projects that have products and services built on top of them, that there's opportunity there for growth, and I don't see that with Doge. I don't see that with Shiba Inu. I don't see that with Bonk. I don't see that with so many other meme coins. These meme coins need to go away. I really wish our regulators would come in and say, oh, Pepe, Shiba Inu, remove them from U.S. exchanges because they don't serve a purpose and they're just a scam. Take them away. But unfortunately, we're not at that level yet. All right, let me give you your economic calendar for mañana. I have to scroll back here because I just jumped into August to get us our unemployment numbers. For tomorrow, Friday, we have the core PCE price index, guys. This is a huge deal. This is massive. right? This is what the Fed's looking at. So this will help us figure out, are we going to see a rate cut in September or not? They're expecting prices to increase. It almost feels like they are raising that bar on purpose so they can come underneath it and be like, see, inflation's under control. Remember, they came in lower than expected on PPI and CPI, and now we're going to see what happens here with that core PCE price index. That's going to be 1 hour before markets open tomorrow. If you are looking for earnings plays, there's really nothing on the earnings front. I will bring up that calendar for you just so we have that on our screen here so I can wrap up. Friday, here's your earnings. AbbVie, Valero, AbbVie, Valero, American Airlines, Northrop Grumman, PG&E, Honeywell, Southwest Airlines, Union Pacific, and that's pretty much it for the big stuff. So there's your earnings for tomorrow and your economic calendar. That's going to do it for me. It's Thursday, which means it's going to be a fun evening. I'm going to go out and do something fun tonight. And then Friday, whiskey day. So I hope you all enjoyed today. If you guys have something you want me to discuss on tomorrow's show, let me know. I will gladly cover that. Send in your questions sooner rather than later. What is perpy? Technician, not sure what you mean by that. Tofi asked me, what should the CPI, core PCE price index numbers be? Heck if I know. I'm not in the inner workings there. My gut tells me that inflation is falling. I'm watching commodity prices fall. I'm watching energy prices feel stabilized to come down just a little bit. I don't know about the housing markets and rentals, etc., but I feel like the number's going to come down and beat expectations tomorrow. All right, I will have to look at CPX tomorrow because I got to run. No more. Yes, Margaret, I've been planning on building out an international segment to this show, so I will try to do that, but no whiskey till tomorrow, Rob. No. I'm just going to do, maybe have a beer tonight. But whiskey tomorrow for sure. And I will see everybody then. Again, email me if you have any questions, things you want me to cover. Michael, you can always email me at TraderMerlin@gmail.com and tell me, hey, could you look at these, this, and this? You always come kind of near the end and ask me. If you do them earlier, I might be able to incorporate those in earlier and do more research for you. So let me know. You can email me at TraderMerlin@gmail.com or go to YouTube and put it down below any of the YouTube videos, and I will see you guys tomorrow. Take care, everybody.